Hello, everybody. I have to admit, today, Tuesday's follow through to Monday session wasn't that great. Gotta get it up close here a little bit, but you can see that the NASDAQ, not only did it fail to close near its intraday highs that it traded up to, but it actually closed below where it opened the S&P 500. And you can see similar situation. Dow Jones Industrial Average actually closing slightly higher than where it opened, but still, reversing those gains. And then even worse off, the Russell 2000 down 0.25% today. Started to rally above the 50-day moving average and was immediately thrown right back underneath of it. So overall, not a good session, especially with the Russell 2000 closing lower where it opened. So still kind of, kind of range bound in between, those October lows and those November highs. But still, I have to admit, today's reversal is not good. Now let's look at our momentum oscillators. On the NASDAQ, you can see the MACD and TSV line. They've worked off overbought condition, but still a long way to go before they're oversold. Stochastics and RSI, same story. There's still a lot of room to go before they're oversold. Russell 2000's kind of racing lower, but with the momentum so strong and in confirmation, MACD, TSV, stochastics and RSI, it's hard for me to think that, the market's going to find an easy time fighting off that momentum. Now, if it does, that's even better. You can see then also on the New York Stock Exchange, we're actually at oversold levels finally on stochastics, barely in RSI, but there's still room to go before we actually get very low. So it's going to be a tough time for the market short term. Oscillators are not, in their favor in the price action today following Monday's strong session. Left a lot to the imagination, and one thing that I left out, there it is. Look at the volume on the New York Stock Exchange, well above average. It's not quite a distribution day because it wasn't down 0.20%, but it was a churn session. So today's churning. When you start off so well and you race to the highs and you close below where you opened on heavier volume, that's not good. That's churning. NASDAQ, similar situation. Volume was below average, so that is the good news. However, it's still technically churning. So a lot is left to the imagination. Now, I say all this seeing that things are looking good. We had 3 new long positions. Chef, really kind of didn't go anywhere, but it had a good, intraday session. LMAT did good. It was up a lot more but by the end of the session, not up as much. And Inflex didn't fail. So we've got a hint with our 3 new long positions that they're good. And one of our ads, STZ, it went past my limit. I didn't get filled on my ad on STZ. So, that's really strong. Loan didn't have a good day, but it didn't have a bad day either. Even though volume was heavier, it still managed to close above where it opened the session before. So overall, our longs are hinting that, maybe the market wants to move higher. So that is a short-term positive. Also, look at Cray. Look at its consolidation pattern that it's setting up. I love this pattern. This is a can slim quality stock. Hopefully it can, maybe move sideways a couple more days and then break out with a pocket pivot point signal and heavier volume. But, there's some good patterns out there. PAC was almost along. It closed a little too far off its intraday highs, and it didn't close above those resistance levels right here to become a new long position. But, PAC also looked good today. And then FGEN is a nice looking biotech off the lows, another pocket pivot point signal. It's 3rd in a row. Very strong volume. And AMCC, Michael J., one of our chat room members, wanted to buy this off this uptrend line if you kind of cut through here, which I'm not a big fan of. But still, it was decent support. That's where he wanted to get it, and look at what it's done. It's immediately up 6%. So, there are things working. Netflix, back-to-back pocket pivot point signal. Don't want to buy it because the breakout's a little sloppy. I'll probably regret it. Heavier volume, but I'm hoping now maybe, because now this is a cut pattern. So now you finally have a cut pattern here. Maybe now it can handle and set up. And then also MBIX, perfect speculator scan, quality name. Breaking out, but no volume, so I can't take it. Now, we do have 2 new long positions. Both are very high quality. First, we'll do NVRO. NVRO is only a perfect speculator scan quality name, but it's in the perfect speculator scan. As you can see right now, out of 10,000 stocks, there's only 25 stocks that qualify, and NVRO right here is one of them. So NVRO, very, very nice. Not a pocket pivot point signal, but it's a breakout following an earnings win. So technically it's an earnings winner with the breakout. So it can be a 2.5% long signal, 2% for being perfect speculator, 0.5% for being an earnings winner. So, and it's also an IPO, so that does increase its odds of potentially being successful. But very nice move in a perfect speculator scan quality name, and we can increase, not really, we can't really increase. So it's 2% for perfect speculator and then the 0.5 for being an earnings winner. We can increase the perfect speculator scan to include that earnings winner now, so 2.5 instead of just 2%. Then we have INCR. INCR is producing another pocket pivot point signal. It too was a recent IPO, so it's got that going for it. It's not only a perfect speculator scan quality, it's actually it's this one right here. I have a scan that gets them before they turn $50 a share. So 25 qualify over 50, 33 qualify over 40. And I'm just going to type it in. INCR is one of them. As you can see, the arrow goes to it there. But perfect speculator quality, CanSlim quality, and it was confirmed in the price volume BOP scan. So you can go 2% CanSlim, 2% price or 2% perfect speculator, and 1% for price volume BOP, making for a whopping 5% position. It can be a big position because to know that we're wrong, what you can do is you can either have all your sell stop below these lows, but I'm not going to do that. I'm going to have half my sell stops below 44.37, and then the last of my sell stops below 42.82. So I wanted to hold above that 50-day moving average, but I'll give it to pull back to here before I know I'm fully wrong in the position. But INCR, 5%, NVR, 2.5%, and then we got an ad signal in REXR. Technically, I wanted what's happening today to have happened yesterday with REXR. We would have had the BOP surge, the volume surge, and a near high a day fresh breakout. Instead, it took it a second day. It makes the pattern look more wedgy, but BOP did increase from the day before, and it is producing another pocket pivot point signal, so it's right at the 10-day moving average. My line in the sand is clear at 517 on this ad signal, so to me, it's worth it. I don't risk more than 2.5% on the position, and it's a beautiful technical pattern. This is one that, so yesterday, if it closes at the high of the day, this is easily a 5% long position with that volume and BOP surge and all the previous green BOP, the strong previous uptrend and all the intraday reversals and the tight base. This is a 5% move, but today it's a little late. It's now wedging, so I'm going to treat it just like a normal signal. No 2.5% ad signal, so it's going to get, since it's an ad, it's going to get 0.5% for being in my green BOP for 20-day scan, and it's going to get 0.5% for being in the price volume BOP scan for a whopping 1% position. So 1% into REXR, 2.5% into NVRO, and 5% into INCR, and the market looks to be on shaky ground. I've also made another critical mistake. So missing the UVXY trade. Remember what I did when I missed the SRTY one? I immediately set limits. Had I done that and set limits at 29.32, intraday today, I would have been filled. It got down to 28.86. I'd be long at 29.32 UVXY, so I would also have my hedge in UVXY, and I would be up on the day. So once again, I've messed up. And it's all right this time because once again I'm focused on the longs, and that's just becoming problematic. I'm just mental lapses, just mental lapses. I should have, as soon as I missed UVXY and it ran here, there's just no way that I'm thinking that it's going to be able to pull back and give me an entry without already knowing that the market's in a clear uptrend again. I was very, very, very much wrong, as the 28.86 low would have gotten me in at 29.32. Unfortunate. That's trading, everyone.